Welcome to Mad Money. Welcome to Cramer. I'll do make friends. I'm just trying to make you a little extra money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. You always wish you had a stock that went up $10 in a day. And today we had a bunch of them. It's a sign that there is a gigantic change afoot, possibly the beginning of something that can make you a lot of money. In a buoyant market where we get strong retail sales numbers, allowing the Dow to gain 230 points, S&P advanced 0.54%, NASDAQ climbed 0.74%. It might be worth going over the anatomy of a 10-point gain in a large-cap stock, because I now think that there are many of these to be had, and I want you to have one. We just need to figure out what we're looking for. First, the good news. These gains are anything but isolated. We're getting a bunch of them each day. Today, we saw PepsiCo soar about $10. PepsiCo? Why? Better than expected numbers, of course. A turn in the fortunes of unhealthy foods. Better executions in a variety of different products. PepsiCo isn't some tiny micro-cap stock. It's not like some meme cyber player or a uranium bottle rocket, and it is not part of the Palantir empire. They probably have something in your fridge or your pantry. Take that, Palantir. We saw Eaton and Parker Hannifin. If you're from the Midwest, these are destination places. Soar. But those are a function of strong data center orders that came from lead contractors ABB and Legrand, two European construction companies that just reported that are huge builders of these warehouses full of servers. There's no doubt that the data center build-out is the single biggest construction boom perhaps since World War II. You can see it if you look at Oracle every day, by the way. I like the build-out. There are many, many orders coming to them. I keep telling you these stocks are good. Parker Hannifin rose $13. Eaton jumped more than $17, or nearly 5%, as investing club holders know. That Eaton move turned my earnings season around because it's a core position in my Travel Trust. Although a few minutes after I learned about the ecstasy of Eaton's victory, I had the agony of Abbott's defeat. So that's something we'll discuss momentarily, because I'm a masochist and I don't want to pretend that everything I do is right, because it isn't. Now, sometimes in this game, you do just get lucky. You'll come across a surprise quarter that tells you everything you need to know about what can cause a big cap stock to rally 10 points in a session. You'll see how a star is born and even get a blueprint for what you need, what you should be looking for. Yesterday, we got a beautiful schematic from none other than Johnson & Johnson. Boy, talk about something that's name brand in your house, which handed you a 10-point victory for the ages. Here's the stock of a story company, one of just two AAA balance sheet companies with a solid dividend yield and great prospects. Everyone knows this company. Everyone. I mean, lately its stock has languished, though, because of litigation. The lawsuits alleging that their talc-based products contained asbestos. J&J Baby Powder used to use talc, though it's been phased out. The plaintiffs bar, using what J&J calls junk science, I like that in the conference call, has recruited more than 80,000 people who claim that talc contained asbestos and gave them cancer. It's kept the lid on the stock. I think that lid is I think that J&J is going to win this, but it's going to take a little while. In the meantime, the lid just blew off the stock yesterday, and it rallied more than 10 points. Least expected rally that I've seen in ages. But you know what? This company put on a clinic that showed you exactly how you can orchestrate such a big gain. So why don't we just take part in the clinic? Well, we'll attend it remotely. What does it take? Surprises. Many surprises. That's what. And I'm going to go over them because it's terrific to have an earnings scorecard / schematic of what a winner looks like. If another company can do something similar, then I think 10 points of upside are just the beginning, including what's going to happen for J&J. Yes, I think that J&J's big move is just starting. So what did J&J have going for it? First, point blank, you got the holy quadruple. That's J&J beating sales and earnings estimates for the quarter and then raising their sales and earnings guidance for the future. You got to have all four for a stock to go up. And they have to be dramatic. J&J raises full-year reported sales guidance by $2 billion, the midpoint, its earnings per share guidance by 25 cents. That's just a monster set of numbers for a company whose stock has been languishing. Second, in the case of the pharmaceutical industry, you need to show some breakthroughs. J&J revealed some results of a 5-year trial that showed how their multiple myeloma immunotherapy is bringing a real life-saving hope to patients suffering from this horrendous form of cancer. Third, the company has to have good news on the tariff front. In this case, J&J had previously put out some very high estimates for the cost of tariffs, and they took them down dramatically. You know what? That made me feel terrific because there are too many companies that are going to have to raise their tariff estimates, which will crush their stocks. For J&J, they cut their tariff forecast from $400 million down to $200 million. I'm calling that better than a sharp stick in the eye. Fourth, We know that there's some sense in the White House that other countries have been abusing us by manipulating their currencies lower, making their exports artificially cheaper versus stuff that we make. Now the shoe's on the other foot with the dollar coming down. The company estimates that it will have an incremental positive FX impact, positive, of $1.1 billion versus its previous guidance. That's outstanding. If you own multinational stocks, you may be in for a huge positive surprise. It's like, it's like one of those things where, like, if you collect found money that's been missing, that's what this is, collecting found money that's been missing. Certainly worth looking for. Fifth, you have to be able to offset what's going away. In every business, there are products that become less important or are copycatted or leapfrogged. They become obsolete. The drug business is a formal exclusivity process governed by the Patent Office. When there's a loss of exclusivity, LOE, it creates a big hole. J&J Stelara, a big-time autoimmune drug, just lost exclusivity. At one point, it generated more than $10 billion a year for this company. Yeah, and now it's just going, no patent protection, eviscerated, blowing a huge hole in earnings. But you know what? J&J is such an outstanding company. It gave you 15.5% operational growth for its pharma business, including 13 brands with double-digit growth. In other words, amazingly, Stelara won't be missed. I never thought that could happen. I thought that this would be the stench of Stelara. 6, if there was something wrong last quarter, it better be fixed. Well, J&J's MedTech division is truly disappointed last quarter. It was a major reason why the stock's doing poorly. Voila! MedTech was a bona fide all-star, something that very few thought possible. 7th, you need big margin expansion, always. This quarter didn't have good gross margins, something that was expected. But J&J did say it expects to see 300 basis points of operating margin expansion. Future margin improvement. Oh, we love that. 8th, I love jaw-dropping projections. There were an incredible number of these on the conference call, including the stunning claim that by 2030, J&J will be the #1 in oncology with sales of more than $50 billion. Talk about something that makes you want to take a long-term position. They also announced a bladder cancer breakthrough, which could be worth $5 billion in peak sales and would mean so much for the patients. Holy cow. Very tough cancer. J&J has something for it. 9th, major healthcare companies buy other companies for growth. That's just what they do. I'd been concerned that the companies J&J bought for its cardio franchise were overpayments, indicating that management doesn't know how to make acquisitions. This is something I'm very concerned about Bristol Myers, by the way, just so you know. It turned out I was wrong in my judgment about J&J. The heart products we saw were remarkable. Let's hope that's the same for Bristol Myers and their neuro business. Finally, we want to know that the company has figured out that we want growth, high growth, and then more growth. And we don't want so-called safety. Safety is like Listerine, Neutrogena, Band-Aids, and Tylenol. Products that can be knocked off by anyone, with Amazon just eviscerating them on price. J&J had the foresight to spin off the underperforming Kenvue mix of consumer products, including those, before they imploded, which we saw earlier this week. Some people second-guess J&J, not after this week. You do these 10 things right, or even just half of them, and I'm telling you, your stock's going to explode higher. If you didn't do it, if you failed to beat and raise, or if you cut, for heaven's sake, like Abbott Labs did, a company we're going to have on tonight, well, I say, look out below. The bottom line, check your stocks. Do they have a chance to change their stripes like J&J? Do they fit the formula? Remember, J&J is just beginning. It's smooth. Then you know what? You may be just sitting on, say it with me, a gold mine. Joe in Massachusetts. Joe.
Hi, Jim. My 3-year-old son and I watch the show every night. He loves the buttons.
I think the kid's got horse sense.
Yeah.
So what's happening?
My stock is down 11% from the all-time highs. Do I buy more now or wait for the tariff updates? My stock is Costco.
No, look, here's the problem with Costco. It is a victim of its own success. All it really does is ever go up, and then has these periods where it languishes. We're in the languish period. That's when you buy Costco. Do I think Costco's in trouble at 50 times earnings? Are you kidding me? I still think Costco may be one of the top 5 companies of all time. That is no slight to Jensen Huang, because he's #1. Never do that. All right, with earnings season in full swing, it's time to check your stocks to see if they can fit the formula I just gave you. Right now, that checklist is actually pretty good. It took me all day. Now, on Mad Money tonight, Abbott Labs just got slammed today after reporting earnings. Buying opportunity, cause for concern, heartache, cheap scotch, linoleum floor? I'll find out. Then the callers of Cramerica stumped me on a little thing called Nutex Health, and then a bigger thing called Flex LNG. So tonight I'm digging into both names to tell you where I come down. And the price of gold and copper have soared so far in 2025. But are the miners cashing in on the rally? I've got the CEO of Barrick Mining to get a read on the state of the commodity space, and he'll tell us whether we can make up the copper that everyone thinks we don't have in this country. So may I suggest that you stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Today, in an otherwise positive market, I was discouraged to get a mixed update from Abbott Labs, a medical technology company that we've long owned for the charitable trust, and I'd say 2 decades. When Abbott Labs reported this morning, the headline results were perfectly solid. Management tightened their full-year earnings guidance rather than raising it, while also ticking down their organic sales growth forecast and their operating margin outlook. A lot of investors, including me, have been hoping they'd raise these numbers, so the stock got clobbered, down more than $11 or 8.5%. I thought it might be down $15. That's what I predicted. It didn't get that low. As I've chronicled many times, this is a stock where we've really had to battle over the past several quarters. We've kept our faith for the charitable trust during some nasty litigation last year, and the stock bounced back from that. But after today's guidance, I'm beginning to wonder if the juice is worth the squeeze. So let's go directly to the source with Robert Ford, who's the chairman and CEO of Abbott Labs, to let him make the case for the stock. Comes on in good and bad times. I like that. Mr. Ford, welcome back to Mad Money.
Well, thank you for having me, Jim.
Okay, so Robert, we know that there were many good things that happened, but let's just touch on what went wrong in diagnostics, because while it was not the biggest division, it certainly had an incredible impact today. And maybe you can put it in perspective to make people feel like that this is not the end of the world for Abbott Labs.
Well, thank you, Jim. And first of all, it's very important for us that we've got our credibility and we deliver what we say we're going to deliver. And that's what we did in Q2. We delivered high single-digit sales growth. We delivered EPS growth of 11% ahead of the street. Gross margin expansion of 100 basis points like we had committed, and a lot of pipeline activity. We even got our tariff to a manageable number. So to your point, we're really in a position to be able to kind of raise our guidance. What ended up happening is what we saw in the quarter was that the recovery that we had planned for our diagnostic business, specifically in China, we did not see the recovery the same way that we had projected for other places. So the United States grew 7%, Europe grew 8%, Latin America grew 16%. So we saw the recovery in our diagnostic business everywhere except China. So what we did today in our guidance was we said we're going to delay that recovery in China from Q2 to Q4, and that brought down the guidance of the revenue growth of specifically of that business. So what are you left with after this guide, Jim? You've got a $44.5 billion revenue business growing 7.5% to 8%. Double-digit EPS, a lot of margin expansion, a very rich pipeline, and ultimately, really the fundamentals of our business are intact. So I maintained our guidance for 2026 in terms of high single-digit growth and double-digit EPS. And a lot of the reports that are coming out right now, they haven't changed their price targets and they haven't changed their forecast. So I think this is a little bit of an overreaction. Of course, we're all over this. We're focused on this. But the fundamentals of the entire rest of the company are pretty much intact. And this is just really a point in time that we have to get through.
It's a $20 billion valuation loss for one particular division and one real issue. But what I heard you say, and what scared me today, and I use the word scare very rarely, is that it's a couple of quarters. This is not something that's going to be solved next quarter, which made me think, you know what, sell the stock, maybe a buyback lower. There's no hurry anymore to own Abbott Labs.
Well, I want to make sure, obviously, we want the recovery to be as fast as possible, and we're all over this. We've made management changes. We spend every single week, we meet with the diagnostic team. So we're all over this, Jim. And if we can get it to recover in Q3, that'll be great. But I think the prudent thing here was just to plan for that recovery more in Q4.
Why did you think that?
But the fundamentals.
But remember, in the last quarter, it did make me feel like that this was not going to be a problem. I think that one of the problems was that you believed this thing was coming to a conclusion. And the same play, unfortunately, with COVID. I mean, the COVID test, it was such a great thing that you did, but it just turns out to be something that just never ends as a problem now, as opposed to a solution.
Well, I'm trying to end that problem, Russ. So we brought our COVID forecast down also, and took that out of the second half. I realize that's a challenge. I mean, if you look at our revenue without COVID, the forecast that the street had was 8 to 8.5. It's now 7.5 to 8. So you had a 50, 60 basis point drop in revenue growth, and now we were down 8% because of that. I think that's a little bit of an overreaction.
Well, I can't disagree, but then again, it's the market. So I can't say, market, you're wrong. I can't go home and tell my wife, you know what, we did great in Abbott today. The market didn't say so, but we did. Medical devices, meanwhile, has been incredibly strong. You had 12.2% organic growth. Tell us about that, because that's the most important. I mean, that's a double-digit growth for a business that a lot of people are in single digits.
That business has been going double digits right now for a couple of years now, several quarters, and it's been growing for a combination of great execution from the team and a very, very rich pipeline, and really across all of these cardiovascular, diabetes, neuromodulation businesses. So we're very well positioned there. Our electrophysiology business accelerated. Our structural heart business was double digit. Our heart failure business that sometimes gets overshadowed grew 14%. Libre, which I know very well, very well, grew 20%. So the fundamentals are still there. Our pharmaceutical business, like I also said, grew high single digits, 8%. So the fundamentals are there, Jim.
And you, unlike almost every other pharma company I know, actually have a products that RFK Jr., who's been critical of a lot of the industry, seems to believe are life-saving and are done in an appropriate fashion.
So yeah, our pharmaceutical business is branded generic pharmaceuticals in emerging markets. So we bring a very large portfolio to these markets that have great fundamentals, growing middle class, aging population, higher birth rates, and they're looking for companies like Abbott to bring high quality healthcare innovations to the market. So we do very well there also. And I think your comment that you made about Libre and about the health secretary, yeah, we believe that Libre is a great tool to improve behavior, improve prevention. So we're aligned with that theme also.
One last question. I know that you have always, as always, one of the greatest balance sheets in the S&P 500. I know that you have a buyback. I know you sound like you have conviction that this problem will come to an end. Can the buyback be used to demonstrate or to sop up stock that perhaps shouldn't be sold by people who have lost faith when maybe that's a mistake?
Well, we have faith in what we're doing, Jim. Like I said, too, we have faith in the fundamentals. We were public about the board authorizing a $7 billion buyback last year. We've got a balance sheet, and we think that this is an overreaction. So I think I'll just leave it like that.
Well, I'll leave it like this. You came on in a not great time. The executives who duck me on a day like today are executives who I lose faith in. The ones who come on a day like today are the ones I keep faith in. And that is Robert Ford, Abbott Laboratories Chairman and CEO. Robert, I really appreciate you coming on a tough day.
Thank you, Jim.
Mad Money's back into the break.
Coming up, it might be summer, but Cramer is turning in some homework on two names you called in about. He's revealing which ones make the grade. Next.
On Monday, I got stumped by Nicole in California, who called in and asked me about a company called Nutex Health. Tiny business. Never heard of it. This is mainly a healthcare provider. They own and operate 24 mini hospitals and hospital outpatient departments across 11 states, with 10 more facilities in various stages of development. Nutex also has a much smaller population health management division, which owns and operates healthcare provider networks, like physicians groups and their affiliates. Basically, though, this is a company that runs a network of standalone emergency room facilities. And management says they can treat over 95% of problems that a normal ER can solve with a fraction of the wait time. We're talking about 15 to 30 minutes instead of multiple hours, filling a crucial gap in our healthcare system. I like that. The reason that I didn't recognize this one is that Nutex Health, as it stands now, was only created 3 years ago when the old privately held Nutex merged with a health management company called Clinigens Holdings in order to come public. On the day the deal was completed, Nutex began trading on the NASDAQ. Its shares skyrocketed a comical 525% to a split-adjusted price of $6,000. Though it came right back down in a matter of weeks. Then it kept going lower because 2022 was a bad time for companies to come public through the back door. In fact, as of last summer, Nutex's market capitalization dropped as low as $22 million, and the company was almost delisted. It only managed to stay on the NASDAQ by executing not one but two reverse splits, Last year, a 1-for-15 reverse split in April, and then a 1-for-10 reverse split in July. But after staving off delisting, the stock's had an incredible run. In a little over 12 months, Nutex rallied from $4 and change to just under 111 as of today. Another staggering move from this thing. Although in the past 2 months, the stock has come down more than 70 points from its highs. Right now, this thing has a market capitalization of $615 million, which is one big reason why it is so darn volatile. So what explains that stunning rally from last year's lows? Okay, in the second half of last year, Nutex found a new way to grow its revenue by hiring a third-party vendor to assist with bill collection. Hospitals have a huge problem with unpaid bills, and these guys are taking advantage of a relatively new arbitration process to collect. So far, it's been very, very effective. Now, the stock really exploded higher after Nutex reported fourth quarter results at the end of March. The numbers were insanely strong, with revenue up 270% year over year. Get this, the company earned $11.12. What do you think Wall Street was expecting? How about a 21-cent loss? Again, 90% of their revenue growth was about effectively collecting unpaid medical bills. Armed with this new arbitration tool, Nutex was suddenly making much, much more money than anyone imagined they could. And that's why throughout the month of April and in early May, as the rest of the market was in rough shape, this stock was flying, climbing from $47 at the end of March to that high of $184 and change at the end of May. Sorry, that was mid-May. Now, these May highs came after Nutex last reported on May 13th, when they once again delivered almost comically higher than expected numbers. Nearly $212 million in revenue. The analysts were only looking for $134 million. $2.56 per share. What were the analysts looking for? How about $1.77? Same story here again. Management said the new arbitration process accounted for 73% of the year-over-year revenue increase. Now, there are some other factors in play. The company opened four new micro hospitals last year, and that helps add growth for sure. But it's peanuts compared to better bill collection. So why has the stock come in over the past couple of months? Well, after a modest pullback in late May, Nutex started pulling back hard in the first week of June, ultimately falling more than 27% that week. Towards the end of that week, an analyst at Benchmark wrote a note explaining that the pullback was because of Blue Cross Blue Shield of Georgia filing a lawsuit against two physician provider groups that are using that same arbitration process that Nutex has had so much success with. Now, look, the lawsuit doesn't involve Nutex, okay? But it's possible the arbitration gravy train all aboard might be facing some additional scrutiny. And that's why I'm reluctant to stick my neck out for this one. I have zero read on the lawsuit in Georgia, but the fact that Nutex's success in this arbitration process has come so easily out of nowhere makes me worried that perhaps it could go just as easily away out of nowhere. Plus, they've already had two great quarters fueled by the process, and two more quarters they'll be lapping the changes, and those tremendous growth numbers will indeed evaporate. At best, it's a major one-time change that instantly made Nutex a lot more profitable. But given that the stocks already have, just up gigantically, you might need a new catalyst if you want more upside. On top of that, hey, how about some yellow flags here? In late March, Nutex delayed the release of its fourth quarter results by a couple of days. That's kind of weird. Then in late May, Nutex disclosed that it hired a new auditor. Not weird, just bad. Neither of these things is deal breaker by itself, but let's say they raise eyebrows. Okay, that's what you say when you're afraid to say anything more. Second, earlier this week, Nutex announced in an 8K filing that its COO is leaving. Again, nothing terrible here. He's leaving to become the CEO of another company. God love you. But it's not something you want to see. Third and finally, the whole healthcare provider universe is about to get slammed thanks to the president's big, beautiful budget bill, because in a couple of years, there'll be major Medicaid cuts, and that means less business for hospital operators. In the end, Nutex has an interesting story, but it sure feels like I missed it. How about that? Now, because we missed it, it's risky. Hey, next up, last night, boy, are we ever up to date? Greg in Michigan asked me about a company called Flex LNG, which has special ships that transport natural gas overseas. And I punted. Why? Because I was worried that it had a 3.4% dividend yield, and that seems big. When you see such a high yield, it warrants further investigation. Because often I've got everything tonight. A red flag. That's a sign that the investors don't trust the dividend. But after looking at the story, you know what? Get this. I'm actually feeling pretty good about Flex LNG. Looking at the numbers, the dividend feels safe to me, even if the company's balance sheet is far from clean. Still, Flex Energy's dividend has remained constant at 75 cents per quarter since mid-2021. Company hasn't had to cut it. In fact, in 2022 and 2023, they threw in some additional special dividends. I don't expect that again, but I'm not worried about the normal payout. They consistently generate much more free cash flow than they need to pay the dividend. This year, the projected cash flow is a bit lower than the total dividend, but the company has $400 million in cash as of the latest quarter, and it has no major debt repayments before 2028. So I think they'll be fine. But I think the fact that it doesn't have the money to cover right now is making people nervous. More important, Flex LNG operates in an increasingly strong business. Almost all their natural gas transportation fleet is contracted out for several years into the future. So you know what? You've got my blessing. You can buy this one for the 13% yield, even if I don't necessarily expect a higher share price, given the profits have been steadily falling, not rising. Here's the bottom line. Nutex Health feels this too risky for me. Sorry. Don't buy. But if you're looking for a big dividend, you can do a lot worse than Flex LNG. I feel like calls. I want to speak to Chris in Pennsylvania. Chris.
Yes. Jim, nice to talk to you. I would like to know the status of Novo Nordisk. It has gone up to $140
I want you
share.
to know, I don't want Novo Nordisk as an ex-name Novo N. And the reason that is because, if there's going to be talk about tariffs on foreign drugs versus Eli Lilly, Novo is going to have an even less of an edge on this thing. So I say, Novo, we don't need the bottom fish. It's not for me. I want to go to Mike in Florida. Mike.
Booyah, Mr. Cramer. How are you?
Booyah. I am just super, Mike. Everything broke my way today. I don't know about you.
I love it. I'm right there with you. I'm calling from beautiful, sunny South Florida, Stuart, Florida, to be exact.
I like Stuart, Florida.
I
like it.
It's beautiful here. Great golf.
I like Firo, too. We want to get into it. I like Firo. My wife likes Del. We'll get to Florida, but take it offline. What do we got for stock-wise?
So I'm a big-time nuclear advocate. Those that know me well know me as the nuclear average Joe, and I love your show, first and foremost.
Well, thank you. People think I radiate.
Yeah, it's all right. I listen. So the stock that I have a question on today is Centrus Energy, ticker LEU.
Okay, I know the company. Centrus Energy fits in this particular niche that I've been saying, along with Oklo. I am not going to go against anybody who wants to buy uranium or nuclear because it's coming back. Do I think it's going to come back within the time frame of the stocks? That no longer is necessary. We have a new kind of market. I believe, as you can be, when you get the book that comes out at the end of September, How to Make Money in Any Market, you will see that I endorse having one speculative position in your portfolio. Make Centrus your speculative position, and I say you are on my team. You will make money in any market. All right, Nutex Health is an interesting play, but it's a bit risky right there. Hey, but this Flex LNG, you could do a lot worse if you had for big dividend. Much more made money at gold and copper prices have hit record highs this year. Are we doing the right thing to bring enough gold into this country since it's so important for us? Why don't we check with the man who introduced me to the concept of how much gold comes from making copper? Dr. Mark Bristow, Barrick Mining. And then a short-term peak may be forming for the top GLP-1 player, just telling us it is. That's why I had to tell that questioner, look out. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer. When it comes to precious metals, it doesn't get much better than gold. Up roughly 27% this year. But in terms of markets now, in general, do you know that copper is now ahead? That's up 37% for the year, partly thanks to demand for all these data centers that are being built, and partly because President Trump just announced a 50% tariff on imported copper effective August 1. Which brings me to Barrick Mining, the old Barrick Gold, which is mainly in the gold business, but also has some copper mines in Chile and Zambia, Saudi Arabia, as well as some new projects in development because they've been pretty aggressive about expanding into copper. As a matter of fact, I learned about copper from the man we're about to speak to. Given how much these two metals have run, where do we go from here? Let's check in with Dr. Mark Bristow. He's the president and CEO of Barrick Mining Corporation to find out. Mark, welcome back to Mad Money.
Jim, how are you doing?
I am doing fine, thanks, and I always want to thank you for your tutelage. I know that you once told me, Jim, you're chronically underestimating how much how much copper is produced as a byproduct of gold mining, and one day that might matter. I think, sir, that day has come, and I want to know what you're doing about it.
Well, it couldn't be in two better metals. The gold price is up, and again, we're seeing a squeeze on the supply side and a growing demand, and copper is even better positioned. And why? Because miners haven't invested in their future, and we've just really unlocked the resources in our ore bodies with the rising gold price rather than investing in the future. And to your point you just made, copper's in exactly the same boat. And as you know, I'm a big investor in mining. I believe in long-term investment, and it ultimately pays off.
Now, Mark, we have a president of the United States who obviously completely agrees with you, and he also is not happy with the fact that so many copper smelters have been closed by environmentalists. These are his words. And he feels like that it's possible that we could change pretty much everything and get it so it's once again efficient. If we did change the environmental laws in this country, and we have better technology now than when we did it before we established the laws, would you be able to mine even more copper just as a standalone business and make good money?
I mean, of course, and that is one of the biggest challenges is, look, the technology for copper smelters, just on copper, is advanced so much that we get the top copper smelters in the world now can extract all the other metals that come with copper. And so the cost of smelting copper through a smelter is almost zero.
Wow.
In fact, recently we've been paid to ship concentrate to the smelters.
Wow. Well, I wonder, this is an administration that has a unique relationship with business. And the people who are watching this show who don't like business and don't like gold and don't like it and are worried about the environment, don't listen to this. You don't have to listen to me. But they want to talk to you. The energy secretary wants to talk to you. The president is interested in this. Is it possible, because you are the dean of the group, to get something going that would make it so that people could understand in Washington that copper is no longer as dirty, and that we have to make sure that the Chinese don't own this market? Because this is about the data center. This is about electronic vehicles, and it's about the future of the country not being held hostage to China.
It's, and Jim, I mean, look, the big challenge is people don't appreciate that we need metals to survive. First of all, in the developed world, and in the United States particularly, if you ask the average folk, how much copper or any metal does the United States consume? No one will know. But it consumes as much as the rest of the developed world. And it needs that metal not only to grow, which is growing all the time, but to reindustrialize. And to your point, that for us to have a planet that our children's children can live in, we need to continue to reindustrialize. And you and I have discussed this before. Also, for us to really have a world for the whole of humanity to survive and prosper in, we need to uplift those countries and populations that have been left behind by society. So to do that, and you know, there's some great statistics. If we didn't have mining, we wouldn't be able to grow all the food that just the people today on Earth need to survive, because we wouldn't have tractors, we wouldn't have plows, and if we didn't have mining, we wouldn't have big cities. So the footprints of our cities would be a lot bigger. And so, you know, and then get to copper. Copper is a unique metal. I always say gold is precious, and copper is as strategic as gold is precious, because it doesn't have any substitutes, and it's needed for a future-facing world.
Do we have a lot of copper in the United States?
Yes. Of course we do.
We have enough to be able to meet our
The
needs.
United States has enormous mineral endowment. Not only, as you know, we're the biggest gold miners in the world, and our biggest mining complex is in the United States. We mine a small amount of copper in the United States, but there's certainly significant endowment across the Midwest of the United States.
And the reason why we're not mining it is because the smelters have been shut down over and over again because of environmental laws.
So let me explain to you. It takes about 20 to 40 years to develop a mine in the United States. We're building a mine in Pakistan, one of the biggest gold copper mines in the world. And we started construction this year. We will be producing in 2028.
Oh, there you go.
Just to put it in perspective.
All right, well, I'm going to leave it there. But as always, first I want to thank you. For years, I totally ignored copper. You told me to stop ignoring it. Now I feel like I should start ignoring gold, because copper is the coin of the realm if we're going to continue to be technologically superior.
No, I think gold is, make sure that you keep a focus on gold, Jim. It's still got a long way to go.
Of course it does. I agree with you. You know that. That's Dr. Mark Bristow. He's the president and CEO of Barrick Mining Corp. Mark, I knew you'd come on and explain it as cogently as possible. Next time we'll talk about Mali and the tougher places. This time was devoted to what you can do for your country, for our country, which says to me that you can make this copper deficit go away if you get the opportunity. Thank you.
Thank you.
Yeah, money's back in the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
It is time. It's time for the lightning round. Rob Colton, the name of stock, that bye. It's also subject to no course. Stock questions at a time by staff, person, graphics, and public. Play the sound. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round. Everybody, let's start with Dan in South Carolina. Dan.
How you doing? Dan from South Carolina. I got a question.
All right, buddy.
How you doing, Cramer?
Sure. I'm doing all right. How about you, partner?
Good. COP. I've been wondering.
All right, buy COP. Let me tell you, I just told Jeff Marks, my partner for the club, that we're in the wrong one now. Coterra's not delivering. We should be in ConocoPhillips. I just said it today. I'm not going to say it behind my back. I tell it to you, and I say it to him. That's how I play it. Let's go to Aaron in Texas. Aaron.
Booyah, Jim. Nice to meet you.
True. I like that. What's going on?
Nice. Let me ask you about AMD. Do you think Lisa Su can get it to $1 trillion market cap soon?
I don't know, but it's going in the right direction. I mean, they obviously have now good GPUs. There's a GPU shortage everywhere. Stock's had a real big run off the bottom. I do think you could have a pullback, but I do think that she's got what it takes to be able to take that stock much higher. How about we go to Jim in Florida? Jim.
Jimmy Chill, a big hot and steamy Naples, Florida booyah to you.
Okay, I'll take that. What's happening?
My question is on a tech company that is going through some restructuring and some management changes, and it has a market cap of $2.2 billion, debt of $1.9 billion, but it appears as if their free cash flow is increasing quite rapidly. Currently pays a 2.38% dividend. With the new CEO, Kurt Wolf, as of May 2025, would you buy, sell, or hold PBI?
You know, I got to look at PBI again. I got snookered on PBI. There was a turnaround that they told me was going to work, and it didn't work, and I kind of walked away from it. Let me open the book again on it, because it's a story company that I really liked, okay? I promise I will do that. I need to go, and I apologize in advance, to Ilham in Virginia. Ilham?
Hey, Jim, how are you?
I'm doing good, buddy. How about you?
Good. I am a club member and long-time listener. Thanks to you and to your team for the valuable advice. Calling from Tyson Corner, Virginia.
Okay.
I'm wondering on uranium stock, CCJ.
I like CCG. It's one of the stocks. It's one of those, along with Oklo and the small form reactors, too. I just think that this is a winner. What am I going to say? I am pro-nuke, and I think people should be in them. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, are cracks developing in the GLP-1 thesis? Cramer's digging into the earnings numbers that'll have Wall Street weighing their options on the drug stocks. Next.
Booyah, Jim. Your integrity makes you the booyah saint of Wall Street.
Booyah, Jimmy Chill.
Booyah, Jimmy Chill.
Booyah, Jim.
Quadruple. That's a lot of booyahs. For years, we've all presumed that these GLP-1 weight loss wonder drugs would change the world. The promise of instant weight loss was so compelling that we expected wholesale changes in behavior. The street went nuts with it, drawing wildly absurd conclusions about what would happen, not just in food and restaurant stocks. For example, when the fear of GLP-1s first swept the industry in September of 2023, the brokerage house Jefferies put out a piece arguing that the huge global market for these drugs by 2030 would mean great news for the airlines. The research note titled, quote, "Way to Go, Airlines Implications of a Slimmer Society," end quote, actually posited that GLP-1s could mean the average flyer loses 10 pounds, which translates into a weight loss of 1,790 pounds per flight and means massive fuel savings for the airlines. So you should go buy the airline stocks. Now, I said at the time that was the peak of the research hysteria. And it did make you wonder about the hype around the GLP-1 drugs. Today, we got our first data point that makes me wonder if the GLP-1s themselves may have hit a short-term peak. I'm talking about the dramatically better than expected quarter from PepsiCo. It was a tour de force on all accounts, especially international. When you read through the conference call and you speak to CEO Raymond Lagarde, it's hard not to question whether something negative has happened in the world of the GLP-1 drugs, because the Frito-Lay numbers, which have been weak, a weakness presumed to be in part caused by GLP-1 use, have suddenly turned up. Now, maybe PepsiCo has figured out how to make portion sizes that can still entice people who are taking Ozempic or Mounjaro. That's the trick, because these drugs make you feel like you're full on less food. So perhaps a smaller sized bag is just a winner. Or maybe PepsiCo has come up with new flavors that can literally beat the GLP-1s, because these drugs reduce your cravings for all sorts of stuff. But who knows if there really is a chemical workaround for Doritos? And definitely possible. However, what I'm thinking, as someone who owns Eli Lilly for the Chapel Trust, and who wishes I owned PepsiCo, is that there might be a short-term peak in the use of these drugs. The Achilles heel of these drugs is that they're too effective. At some point, you lose enough weight, and you might think you can stop taking them. So far, it looks like that might be happening with people who've been on these things for a year. Maybe they just don't understand that the weight comes right back on when you stop taking them. We know there are numbers that show a big drop-off in GLP-1 use after a little more than a year. Maybe people have had it with giving themselves needles. Or maybe there just aren't enough people who are willing to pay full price. Until a few months ago, compounding pharmacies could still sell cheaper generic versions because there was a serious shortage. That's now over. In the end, I think it's probably hard to keep taking this stuff once you're thin. Whatever the case, if Eli Lilly's going to break out from this level, it needs breakthroughs in new areas, heart, brain, that it just doesn't have right now. Or there has to be some new data that shows something else positive that the GLP-1 drugs can do. And, of course, it's got to start coming in pill form because people are tired of taking needles. I still like the stock of Eli Lilly. We have a huge gain in this one for the Chapel Trust. We're going to hang on to it for now. But PepsiCo's breakout, a lack of Lilly's breakthroughs, and a reminder that at one point we were thinking of buying the airlines because of these GLP-1 drugs means that I no longer feel as certain about Lilly's future without science that says these drugs do a lot more than just control diabetes and make you lose some weight. Alex says always bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you next time.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.